All right. Welcome to Suspense accounts. Quickly we'll run through the use of suspense accounts to detect and the use of the trial balance to detect and correct errors and the implication for with of course suspense accounts. Okay. Now of course we have to look at the type of errors we're talking about. Of course, these are errors in the double entry. Errors made in double entry, and then we'll subdivide that into errors that are detected by the trial balance and those that are not detected by trial balance. Well, because that is critical to the type of correction we are going to perform for the reconciliation. If an error is detected by the trial balance, it will affect the suspense accounts. If it is not detected by trial balance, it does not affect the suspense accounts, and of course this will affect the nature of the journal entries. All right. Then of course at the last part of it, we'll be looking at adjusting any already calculated profits from the erroneous trial balance. All right. So first of all, are the errors. Let's take a quick run through the errors that are detected by trial balance. You have your transposition error. This happens when you take a figure, let us say 1076, and you make it 1706. Okay, and this error happens very often. Okay, now of course it's called the divided by 9 error because the difference between the two numbers is always divisible by 9, and of course that is a way of ascertaining whether or not you have made a transposition error in your double entry. If the final difference between your debit and your credit side of a trial balance is divisible by 9, then you may as well have a transposition error. Okay, so don't forget your trial balance will look something like this. Okay, this will be what our trial balance will look like. It's a sheet where we of course extracted every account we have in the general ledger and the balances they're currently displaying in a general ledger, the brought forward balances. All right, and sum them up, and of course you can see there's something wrong with these accounts because it is lopsided by 200, and so we have to create a suspense account to make everything okay. So moving on from that, then we have other types of errors. This don't forget, all the type of errors are detected by trial balance, and this is mainly because the debits you have made do not equal the credits. I repeat, the debits do not equal the credits. If the debits you have made equal the credits, no matter how atrocious the error is, the trial balance will not detect it. But if the debits and the credits are not in agreement, then trial balance will not detect that form of error. You would need another reconciliation technique, perhaps bank reconciliations or control account reconciliations or stock taking or asset verification to determine those types of errors, those particular kind of errors. Okay, so now when you're making errors from the books of prime entry and you make other types of posting errors, you post wrongly from the books of prime entry. Okay, and again, this will lead to an error when the debits do not equal the credits. Like for instance, you post only one side of a transaction and leave the other side blank, or you post them at different numbers, even if but in this case it's not a transposition error. That will also affect the trial balance. Single-sided entries, of course, this is like we just said, posting one side and leaving the other side uncared for. Now two entries to the same side, that is, you have a debit in one account and a debit in another account. This is called a times 2 error because the difference will always be magnified. Okay, it will be doubled, it will be multiplied by 2. And then of course you have casting errors. Casting errors can be made in general ledger accounts. They can even be made in the prime entry books, or even the trial balance can be improperly cast if it is if of course you operate a manual system. Errors on bringing forward balances. For instance, if you bring a balance, if you omit to bring a balance, or you bring a balance on the wrong side, if it's brought on the wrong side, this will again lead to a times 2 error. And of course errors of extraction, that is extraction is when you are actually preparing your trial balance and you're bringing down all the ledger accounts balances into your trial balance. That's the process of extraction. So if you omit an account balance, yes, your trial balance will not agree. Or if you put the wrong amount, it will also not agree. Or if you put it on the wrong side, then you have another times 2 error. Okay. So what about errors that are that are not detected by the trial balance? In this case, the debits and the credits are in happy agreement. All right. Uh, Easy example: errors of commission. These are posted to the wrong accounts. For instance, instead of posting to sales accounts, for instance, we end up posting to rent income accounts. Okay, and of course that is obviously the wrong income for that type, the wrong accounts. Errors of accounting principle. These are similar to commission errors, but of course they are brought into play because they are so atrocious that they break an accounting principle. A very common example is when a revenue expenditure is treated as a capital expenditure or vice versa. All right, like for instance, motor vehicle repairs is treated as a new motor vehicle and added to the motor vehicle's account when we just repaired an existing motor vehicle. So what should have been an expense ends up being an asset. Okay, and then they will have depreciated these repairs as if it was an asset. So that's a horrible error, and it's not detected by the trial balance, but it will have a cascading effect in which many amounts we have from the financial statements will be wrong. Errors of omission. All right, if the omission is in the book of prime entry, then of course there will be no posting from it, so there's no debit to speak of, neither is there any credits. They are both non-existent. So in this case, of course, 0 equals 0. And of course, compensation errors, which are rare. For instance, an amount that was meant to be 820 was recorded instead as 880. Okay, giving a difference of 60, of course, and an amount that should have been written as 60 was omitted as well. All right, so this is also a difference of what, 60. This will be a debit, this will be a credit, and they both somehow work to cancel out each other. Yes, compensating errors are rare, but I've had a student make about four compensating error, and had a perfectly agreed trial balance, but with atrocious errors behind them. All right, now of course we look at the relevance of control accounts. Okay, now this is something I have discussed already. All right, if control accounts are maintained in the general ledger, errors in individual accounts will not affect the balancing of the trial balance. This is because the individual accounts are kept in memorandum. So as they're kept in memorandum, whatever error is made in them does not affect the trial balance. Okay, because they are not in the general ledger. The trial balance is only concerned with general ledger accounts. All right, if it is not maintained, if control accounts are not maintained, then it means that the individual supplier and customer accounts are kept in a general ledger, and such any errors made in them would affect the trial balance. All right, then we come to suspense accounts again. Of course, I have already shown you an example of a suspense account. This is a suspense account. Let me zoom in a bit. Okay, zoom in just nice and easy. All right, so of course, as you can see, there is initially no account called a suspense account when we prepare our general ledger. Okay, or of course maybe somebody who is particularly error prone will keep a suspense account just to prepare for a rainy day. So what happens is that when the debits and the credits of trial balance do not agree, okay, we put up a plug to make them agree and call that plug the suspense accounts, and then after having done that, we subsequently open the suspense accounts. All right, so that everything so that we can go forward to cancel out the difference, and once the difference is cancelled out, once we have found the errors, we'll cancel out the difference and suspense accounts will be closed. All right. So to maintain double entry when the destination of a posting is unknown, that is the purpose of the suspense account. Okay, to record any difference on a trial balance. Okay, when errors affecting the trial balance will be corrected against the suspense account until it is clear to 0. This is of course is the purpose we are concerned about. So when correcting errors, all right, the double entry, the other entry is always to the suspense account. So one entry will be to account X and the other entry will be to suspense accounts. Of course that depends on whether or not the error affected the trial balance. If it did not affect the trial balance, there will be no entry to the suspense account. So let's take an example now to get it into the realm of practicality. Now, this first example is just about using journal entries to correct errors. It has nothing to do with suspense accounts particularly. Okay, so and of course this is it. Prepare a journal entry to correct the following errors. Prepare journal entries to correct the following errors. Repairs of 3,000 have been incorrectly included as tangible non-current assets. A payment of 3,000 to a supplier P. Andreev was posted to A. Andreev's account in error, and a credit sale of $10 is misread and recorded in the sales day books as $1,000. So I get right to that. Don't need this ledger account, so just hide it. Alright, so what the only thing that's needed from us is our double entries, so I'll just quickly do that. Alright, so for the first error, so it should be error 1. Okay, now repairs of 3,000 have been incorrectly included as tangible non-current assets. Okay, so well, what has happened, of course, that we need to transfer it from tangible non-current asset back to repairs. If everything had been done correctly in the first place, tangible repairs would have been debited. So we just of course that is what we want to end up with. So we can just quickly debit repairs account, in this case $3,000, and then we'll credit the account which got the bad entry, which is in this case tangible non-current assets. With $3,000, that pretty much corrects error 1. Now for error 2, the payment of 300 to supplier P. Andreev was posted to A. Andreev's account in errors. Alright, now both P. Andreev and A. Andreev are suppliers, so both of their accounts are in the payables ledger. Okay, so they are both payables accounts, which makes them credits. Alright, now if you pay a supplier, you obviously have to remove the amount from the supplier's account, and to remove an amount from a credit account, you debit the account. So what we need to do, that is the correct entry, is to debit P. Andreev, because he was the one to whom we paid money. So debit P. Andreev by 300, and of course to take it out of the wrong accounts, we credit A. Andreev by 300. And finally, error 3, a credit sale of $10 is misread and recorded in the sales day book as $1,000. Well, that is nice. Some people will pray for that. Alright, so in this case, credit sale of $10 is misread and recorded in sales day book as $1,000. Now, of course, that is an original entry error. So from that error, we're going to make posting to the sales account and to the receivables account, and both of them will have the erroneous figure. So if we're going to correct, we need to correct both those accounts. All right, now of course the accounts have been grossly overstated, so we need to reduce them by 990. Okay, so we need to reduce both accounts by 990, but which account gets the debit, which account gets the credit? Sales account is income, so when this error was initially committed, it was credited to sales accounts. So in order to reverse that, we need to debit sales accounts, so we debit sales revenue accounts. And of course receivables is an asset, so to cancel that out, you credit trade receivables. Alright, that's fantastic. I think I can zoom in a bit more for the benefit of legibility. Okay, so that ends the first example. I'm going to stop here now for now, and I'll continue with the second example soon.